Meet Rob Nelson, talk show host.
Because you got the 70s thing going there. I got someone's underwear.
Robert Kennedy, thanks for taking a minute. Simple question.
Tucker?
It's good to see you. Listen,
You're a Bitcoin maximalist. You're Bitcoin forever.
I hate this central bank digital currency.
Hey, I don't have all the answers, but together, I know we can find them.
All right, everybody. Hey, welcome to Rob Nelson Live. Good to have you with me. Happy Monday night, Thanksgiving weekend. A lot going on. And I got Landy with me, special guest today. So get ready. Landy's icon will be there. I wonder if we'll ever see Landy's face. But Landy's, I love Landy. We're going to have a fun, he's going to join me in just a couple minutes. He's sitting backstage waiting. I'm just going to set this up real quick. We're going to be obviously talking about crypto, Bitcoin. But I want to just real quickly start with something else, just as a sort of setup here. because I've been thinking a lot about Marjorie Taylor Greene stepping out of Congress, and her rationale, she says, is there's just too much dysfunction. That's a fact, and that both parties don't really work for the American people. Also a fact. Is that the reason she did it? Hard to say. I mean, timing's weird. She did it the minute Trump sort of dumped her. And he dumped her hard. Like, imagine dumping. Like, she's the most loyal person he had in Congress. She was there when no one else was there, by the way. She was like one of the lone people. Everybody's on board now, all the Republicans. Remember when they weren't? She was out there up front. But Marjorie Taylor Greene's a true populist. I will say that. And this does connect a little to the crypto Bitcoin conversation. I believe the populism of the left and the right aren't that very far apart. Trump is an economic populist on the right. You know, Mondani in New York is an economic populist on the left. It's not a surprise to me that they see an overlap. Very different approaches, but similar goal. Populism is economics for the people, and a similar goal. Everybody knows Trump can say what he wants, greatest economy ever. He knows people are struggling. He knows people can't pay their rent. He knows prices are still too high. So does Mondani. That left-right populism, MTG, Marjorie Taylor Greene, economic populist. And we'll see what she does. But I will say the level of the temperature right now is so high, and the name calling her a traitor, calling her Marjorie Taylor Brown because green turns to brown when there's rot involved. That's Trump's thing. Man, that guy lays him out there. And I'm not, and obviously Trump's October 10th. What is it about things happening bad in October? His October 10th China parlay wasn't a parlay. I just used that word. China move threatening 100% tariffs, did like a flash crash, right? And the markets, and Landy and I are going to talk about it. The markets went, I mean, I don't know, it was 26 billion or something got wiped out. But we're already facing a climate. And one of the questions I want to talk to Landy about is bear market or bull market. Conventional wisdom, Bitcoin's down about 30% from its 126 high. That's way more. That's 10 times the S&P. This may be the biggest drop since the last peak right before, the FTX collapse. And I think the interest rate issues playing into that. But I think we're in a really unique time. And obviously that flash crash, but it's like $1 trillion been wiped out. Are we in a bear market? Are we in a bull market? I think what's so interesting right now, and this is where I'm going to bring Landy in a second here, is that this is the first time we're seeing a crypto market with a lot of traditional, let's call it normal investment, like the normies are here, institutional investors pouring liquidity in, which might suggest why the turbulence. Landy and I are going to talk about that. I think there are a lot of reasons for that turbulence, and I think a lot of people had to dump, especially when their margins got called. So it's always been volatile. It's still volatile. The question is that volatility going to keep going like this? Yeah, but over what time frame? That's where Landy enters the picture. So let me just add him here. Okay. Second. There it is. There's Landy. Hey, Landy.
How you doing, Rob?
Welcome to the show.
Well, thanks for having me
Landy, I'm having a hard time hearing you, so hold on. I don't hear you, Landy. Hold on. Okay. Why don't I hear Landy? Landy hears me. Landy,
Can you hear me now?
Let me see if I switch this, if it makes a difference. Why can't I hear Landy?
Well,
I have to do, Landy, to hear you.
I'm
Because,
checking to see.
for whatever reason,
if the
I'm getting
audience
no
can hear me.
volume, but I think we are getting your volume. I'm just not actually hearing your volume. So here's what I'm going to do real quick, Landy. I'm going to just, I'm going to actually log in to hear us, and I'm going to hear you on my feed. Okay. So Landy, this is going to be fun. You stay there. I walk away for 2 seconds, and then I come back. And I come back with the AirPod. Things I wasn't expecting to have to worry about. Hold on, Landy. Stick with me, buddy.
No worries.
One person, you can't, everybody can hear us talking. I just can't hear you. So I'm going to make that, I'm going to fix that because I'm going to actually go and hear you in my ear live. All right.
You're gonna
All
hear
right,
me on a bit of a
Andy,
delay.
I'm going to hear you on a delay.
Yep. So this is going to be this is the true game of telephone here. But thank
So,
you for
Landy,
having me.
I'm going to hear you on a delay. Are you hearing me on a delay? Or are you hearing me just fine?
I'm hearing you just fine, but I can actually mute you and go to the
That's right.
stream and talk to you through the stream. So give me just a second.
I'm glad to have you. Yeah, do that because then I'll be the only one listening on a delay.
Okay.
That's the way to do it.
Give me just a second.
I'll be the only one hearing it.
Just a second. Just a second. Getting it all set up here.
Yeah, we'll take a second. We'll take a second. No idea why. It's always something. It's all good. It's all good.
Coordinating right now. All right. So I'm going to be logging in the stream. We'll catch up and then I'll hear you through the stream and we can basically just talk through the stream. So let me do that. There we go. So now I'm only hearing you through the stream instead of through the studio.
Awesome. So I'll have a little delay on my end, but that's okay. Because you're hearing me fine. You're hearing me in real time, right?
Yeah, we have to catch up. So
It's gonna be something.
I know you were. Yes, I'm kind of hearing you
Landy,
in real
where are you?
time. We'll catch up here in just a second because I'm also going to hear myself.
You know,
Yeah, this is going to be a
this
little
might be
difficult
too.
because
I don't
from
know why I'm not
microphone,
hearing
it's like
audio.
talking over satellite. Like,
You wanna
Rob,
hold
you're
on
out in
one
the
second?
field.
You wanna hold on one
How is it
second? I
looking
might be able
out
to figure
there?
it out if you hold on one second. It's going to be too hard. It's going to be too hard. Yep. Hold on one second. Let me see if I can figure it. Hold on. Hey, Jorge, can you do me a huge favor? Is there any chance? I'm doing a live stream and I can't hear any audio in my, I hear the audio in the stream, but I can't hear the audio in the coming from it on my computer. Could you log in and just do it? Okay. So, Landy, I'm going to have this fixed if you'll wait 2 minutes.
Okay.
Because my tech guy's just going to come into my computer from remote and fix it.
Not a problem.
All right, Jorge, let me know. Everybody, enjoy the delay of game. Landy, you can talk to them if you want. They can hear you fine.
Yeah. So you'll just hear me on a delay, but I heard kind of your basic questions, and I don't know if you want to share. I can always share a screen once we're able to talk in real time here. I can show you some pretty interesting stuff about the bull market versus bear market and the large drawdown that we've seen. Is one of the largest drawdowns that we've seen since the FTX collapse, but it's also not that big of a drawdown in the grand scheme of things. We are getting all of the bearish signals. So and those bearish signals are starting to build up on a higher term time frame. But we'll talk about it in just a minute here, because that is top of mind for everyone in this market environment right
So
now.
Landy, keep. Landy, talk for a second.
Yeah, no worries. I'm here.
Okay, thanks, Jorge. I appreciate it so much. All right, Landy, we're back. It's working.
Awesome.
So we'll start this again a little bit here.
Landy, talk for a second.
But I gotta hang you up here. I'm getting rid of you on this.
Okay, thanks, Jorge. I appreciate it so much.
No worries.
Okay.
All right, Landy, we're back. It's working. Awesome.
Okay, Landy, here we go. Let's start again. A little late, but better late than never. Welcome to the show, Landy. Not quite how you
thanks,
expected.
Rob.
So sorry, everybody who got tired of watching Landy's. Landy is. I don't know what your avatar is doing. Is it throwing up?
Yes, it's puking. It's puking a rainbow. Well, sort of a rainbow.
So Landy, so I started this out kind of, and I heard what you said in the interim while my audio wasn't working. It's weird though. It's perfect metaphor for what's happening. The communication lines are just off with everything. I want to talk about whether we're entering a bear market, but I also want to talk about why and what's happened, right? So the first question for me is, before we even get into those numbers, I mean, I think intuitively most people would have thought Bitcoin would do well because there was all this institutional investment coming in, and it did push the price up. And then it would keep pushing it up because of that, and that would stabilize a little of the volatility, right? Then we have October 10th, the China stuff. The market takes a flash crash.
Mm-hmm.
A lot of money's wiped out, but then it just keeps going, right? And then you just start, over the course of a couple of weeks, you're just watching like $1 trillion get wiped out. People probably are clearing, like I said, having to call their margins and stuff like that, cover their margins. But and the Fed interest rate probably factoring into that, people wondering what's going to happen. But what underlying is happening overall that would cause this sustained downward thing? And then let's talk about how low we're going to go before we go up and all that stuff. But what's underlying it in your mind, other than the things I said, or including those, that would cause the market to do such a, dramatic, continual down? Because it doesn't fit, does it?
It does. Yeah, it does. It fits in with the normal halving cycle, actually, for Bitcoin. But in the global context, for what's going on in the macroeconomic environment, we're seeing a global liquidity crunch, right? And a lot of this being driven by, the tightening that occurred post COVID. So we're now getting to the point where that liquidity crunch and the markets rising off of the lows with tightening, right? And kind of bucking the trend that many would expect, or that the narrative. But this is pretty normal, actually. When we move from QE to QT, we typically see the lagging effects, right? And as we're tightening into all of the money that was printed, all of that liquidity, and it's just sapping the liquidity out of the system or siloing it, right? And concentrating it in pockets. And we've seen that occur in equities markets, right?
Mm-hmm.
In the quote unquote Mag 7, where we're seeing realistically 10 stocks that are underlying the entire move up for stock markets. And we saw Bitcoin moving as well. And right now, we got the cuts last year. We've gotten a few cuts since. And we didn't end QT until, well, now we're going to be ending QT, right? And every time we end QT, this results in balance sheet expansion, which is not money printing, right? That's the Fed swapping cash for assets, right? And they will do balance sheet expansion. They're ending QT. They're going to do balance sheet expansion. And what always follows balance sheet expansion as you're cutting rates? Well, you've got to have a floor for demand. What's the floor for demand? It's the Fed at the end of the day, right? So the buyer of last resort. So we're still not going to see, we're going to see a freeing of liquidity through refinance, right? And that's where, we're starting to see the repo that was stood up in 21 under Biden's watch. There's the permanent repo facility that was stood up, or the standing repo facility, and 21, 22 timeframe. I actually have to go check, but we have a permanent repo facility, right? And that's mirroring kind of the flows in and out there, kind of showing a little bit of stresses, but not too much. Nothing that can't be handled right now. Then of course the reverse repo, and then trying to maintain the floor and the ceiling for rates while they're cutting. And this causes tightening in the markets, which means that we're going to get concentrated liquidity. We get more players that are going to be pulling out and pulling to cash and hedging at logical levels. Now, can this set off a cascade? Absolutely. Every time there's a shock to the market in terms of news or unexpected earnings or something like that, or jobs data comes in weak, it's of course going to be usually a reflection of earnings or of efficiency improvements that they're trying to make so that they don't get
Right.
squeezed at the margins, right?
So let me ask you two things. One's a broader philosophical question. I don't know that you have an answer, but it's something that definitely I've thought a lot about, which is the question of why, Bitcoin was supposed to not mirror the traditional markets, and it seems to correlate so well. It seems to operate on the same track, reacting to the same things the same way, just with more volatility sometimes. That's one. Two is, but in typical halvings, don't you usually see, December and end of November, don't you usually see a push up?
Typically, yeah, but we've been off cycle, right? So for Bitcoin in particular, the reason why we talk about cycles in Bitcoin is because of the halving cycle, but there's actually two cycles. There's the halving cycle, and then there's the post-halving minor capitulation cycle. And we were early to new all-time highs prior to the halving, right? Post ETF launch, we went in and made a new all-time high prior to the halving for Bitcoin. And typically, about anywhere from 6 to 12 or maybe 14 months at the longest prior, we get what's called a minor capitulation. And this is just fundamental to how the network works. And this is just one aspect, because this is just the price interplay with how miners work, right? So the rewards get halved. Miners are front running this into the halving, usually selling into it. We saw that we sold into it. Miners are still well in profit as hash rate picks up on the network. Well, so does difficulty. So as price goes up, hash rate increases as more miners come online to mine Bitcoin. Profitability remains high, but then the network difficulty starts to adjust every 2 weeks and it catches up. And every time the Bitcoin's price pauses and starts to retrace and go lower, well, difficulty lags, right? So it catches up and goes over top, where miners become less and less. They have less and less margin, essentially. So they become less and less profitable until it flips to where they're not, where the least efficient miners have to turn off because they're no longer profitable.
Right.
This causes hash rate to dip, and then anything that's mined from there, you can either loss run, which means that if your miner's unprofitable, you're giving yourself runway by just selling Bitcoin. You can dip into the treasury and sell some of your treasury Bitcoin as well off the binding side, or you can just hold, right? Just shut machines down and wait. And this is where that's called minor capitulation. And we always have a full-blown minor capitulation post-halving, and we have yet to have one. We're about 6 months late to that, right? So that's one of the reasons why we're not really seeing, and this happens every time. It doesn't matter what the price is. When prices rise very, very fast, difficulty chases. Once price consolidates, difficulty catches up. Miners become less profitable. They start turning machines off. then the floor for them gets lower over time as difficulty adjusts down. They get their margin back, they turn machines on, but that also allows price to fall further. They're also part of the selling in the open market, applying that pressure down. That's what we've seen at the most recent high from October, right? We ran into $126,000. My target was 123 to 125. We closed right around $125,000, but threw a swing at 126, so close enough. But
You can put a chart up if you want, by the way.
I've got it. It's in the, you can share it if you want.
Hold on. Where is it? Let me get it.
It should be under sources.
Yeah, here it is.
Yeah. So this is where now structurally we're still in a bull market. Might want to do us as little icons there. Now we're structurally still in a bull market, but we did just swing the last higher low structurally, right? And the problem therein lies that we've now breached a closing higher low. And this is looking like sideways. We're actually in a macro compression right now. So this is a compression on a monthly time frame. We just dipped into this higher low close, and the last swing higher low is at 74.4. And this is where if we get a structure break, we're probably going to head down to, somewhere around the 60, anywhere below 74, or anywhere below this 82. We hit a big weekly at 80, but if we start closing below 82 and a half, we're probably either running that low at 74, or we're going to come in here for the prior high at 69, 60, maybe even dip down into the upper 50s at 58 or something. Right now, that's bad. That's a structure break. And why? So that's bear market territory when you get a structure break. So it's very close to the edge. And a lot of people are asking the question of why. Somebody knew to dump really hard for Bitcoin, especially on the 10th. We had massive liquidations across centralized exchanges and, and perp dexes as well. For cryptocurrencies in general, but Bitcoin saw about $19 billion wiped out, $15 to $19 billion, depending on who you ask and what was measured. But that's all open interest and futures contracts that got wiped out. So a bunch of leverage came out of the system. We got a bounce, but that bounce failed because miners were underwater. They're already shutting machines off. Hash rate is turning over. Miners are part of that selling now. But somebody knew to dump it around then because it was the same week that difficulty adjusted up for miners that we got that big flash crash down, puts miners underwater. They start turning machines off. If we had just continued to the upside, miners would have stayed profitable. They would have kept machines on, right? And we wouldn't have had additional selling pressure from the miners. Now, where did the selling pressure come from? Well, who knows? Anybody could have kicked it off. Clearly, somebody that knows these markets well. But then you have the short side, short interest, percentage of float for like MicroStrategy was hitting around 20 to 22% around that same time. So that's the tradable shares. About 22% were short, meaning that you had a lot of short sellers coming into these highs as well. So, and it wasn't the only period where we saw, short selling at around 18 to 22%. We saw it back here as well for MicroStrategy. We see it over here. MicroStrategy being the biggest vector outside of the spot ETFs that is used as a vector for Bitcoin volatility, right? And, we saw some outflows, but nothing abnormal. So this really came from the chain side of things, spot side. Somebody sold spot in a big way to slam things down. Once Bitcoin took a nosedive, the entire crypto space took a nosedive, and you have cascading liquidations everywhere. Now, people are attributing it to Binance and the DPEG of USDE and like all this other stuff. But realistically, someone sold spot Bitcoin and kicked it all off in the first place. So somebody that knows where miner operations are, somebody who understands the market structure as well. Q4 to Q1 would be normal liquidity cycle, bull market end, right? It would be right around now to Q1 of next year for Bitcoin anyway. The thing that gives me pause is on the mining side, this would be the first post-halving capitulation event if it does occur. We haven't even seen it occur. We're not in capitulation yet.
Mm-hmm.
Full capitulation means that we have difficulty. We have a hash rate dump, and right now, hash is very, very strong. In fact, I'll show you how strong. This is how beautiful this is. I'll give you a 2-year look at hash here. Just let me switch the screen. I can share this tab instead. See how this green line is the we're gonna get rid of hash rate because that's just annoying to look at. This multicolored line is hash rate. The red line here is difficulty. And you see that when hash rate is above difficulty, your price is driving
Mm-hmm.
hash rate, right? And when hash rate and price are rising, difficulty chases. And then we get a
Mm-hmm.
consolidation. This was around April of last year. And this was right around the time that we were running into the highs, right?
Mm-hmm.
March into April of 2024. That was also the halving for Bitcoin, right? Price is going up, hash rate is following. It started to consolidate, put in the high, and then get a correction. Now we get difficulty catches up. Price gets below, and starts to put in a high. Hash rate starts to dump off. Once difficulty's caught up, miners are turning off. We get a little bit of capitulation, but nothing massive. And then, we just march on, right? But one of the things that we're seeing is a really high hash rate. And right here, this over here, if you look here, this is September into early October, right?
Mm-hmm.
Right here on this chart. We were already seeing difficulty adjust up as we were making a new higher high. Miners were turning off because difficulty was too high. It wasn't as profitable. And so miners start shutting off. We see
When is
hash
that?
rate dumping. This is late September into early October. Difficulty was up over top of hash rate, and miners were starting to turn off. Why is that important? Because then somebody stepped into the market. If Bitcoin broke and started to run above and leg up to $135,000, $140,000, this wouldn't have been as important. Hash rate would have followed up through difficulty. Difficulty continues to chase right here. And I'll zoom in a little bit further here so you can see.
Yep.
This is the reason why this is important is because somebody stepped if they stopped the rally by dumping a lot of spot, which set off a cascade. Now, of course, this wasn't unique to just Bitcoin. There was news-based events, but somebody well-timed it, knows Bitcoin well, and knows how to control the crypto markets because everything follows Bitcoin. But we were already, since October 1st, we saw an adjustment of hash rate up. So miners are starting to shut down coming into the 6th, right? Somebody stepped in, dumped the market, and miners were continued to shut off. We recovered. We started losing levels in Bitcoin though. And now we're in backwardization in Bitcoin where we see that hash is trying to recover, difficulties all over the place, but we're making structural changes. We haven't even seen a capitulation event yet. This gives me pause on calling a bear market, meaning that we could even see a deviation. And I show this in my video that's going to be going up here shortly, but we could even see a deviation of trend and then a new high. This would be out of character.
So let me pause you for a second. I want to explore that. It's a lot of good stuff here. First of all, before you look at the deviation, no one will know, but what's the most likely type of person who dumped? Is it a miner?
I don't.
It wouldn't make sense if it was like a BlackRock, right? That wouldn't make a lot of sense, right?
No, and I mean even IBIT had at the peak they had 2% short float, right? So they were now. It really a lot of people are accusing JP Morgan of shenanigans on both, and maybe there's some coordination there. JP Morgan having such a high short float on Strategy, Michael Saylor's company. And then we didn't see these types of short floats across the various spot ETFs. But what was the type of person? I mean, if I had the billions of dollars worth of Bitcoin that started to sell off, I would set it off because then you can just get way lower prices. I mean, if that was me, just as an
Trust
opportunist.
me, I
Could
don't
be
have that
China.
high, but I wish I'd sold off at 123 and just, waited and bought back in, which I was planning on doing. But then
Could be
I was
China.
planning on doing it. I was just
Yeah.
like a day late.
Yeah, we don't know. I mean, it could be China, it could be, an actor here in the US, it could be coordinated, but
And
realistically, it doesn't
and
even have
Landy,
to be coordinated.
is the goal in doing that, and then I want to get back to your deviation, but is the goal in
Yeah.
doing that probably an intentional attempt to force the price down and then rebuy? Because they
Yeah,
know eventually it will move back up, right? That's the part
for
that
sure.
people new to the space don't get. It won't stay down. It just might stay down for 8 months.
Yes, which is just a bear market, which honestly, I think if we do go into a bear market, it's going to be short-lived. That's my take based on the fact that we haven't seen a minor capitulation event. And the main reason why is because we have so much institutional capital coming in, really
Hmm.
helping to buoy price and gives the miners time. In fact, it's almost perfectly timed. Miners are coming in, investors are coming in, allowing miners to even hold by investing in the mining operations, gives them runway to hold through these periods when
Hmm.
some of their fleet might be unproductive or shut
Hmm.
down. So look, this just gives this is opportunists to get better prices. And I would say if you're a Bitcoiner, you want cheaper sats. You want cheaper Bitcoin, right? Like don't send this to the 250,
You said
500,000.
that to me. You said that to me the other day. You said we should be grateful for lower prices. I'm glad you reminded me of that because I was going to have you explain that to people. Because again, remember, now we've got a lot more people in the space who came in as retail investors. They got to be panicking right now, going, how low does this go before I just sell off, before I'm literally like losing money all the time, right? There's not as many hodlers. There's all kinds of new people who view this like they look at any other speculative asset, right? Will
Yeah.
that actually cause the price to deflate more? Or will the cycle, no matter what? Because when you say we should be grateful for low prices, yes. But if you bought, say, if I bought at a certain amount, right? Say I'm not an early person in, right? Say I bought at 50 or 60 or even 70, right?
Hmm.
You know, and buying in that window. As it starts dropping significantly down to that, now everybody who's buying at that is risking losing, if they don't hold on, losing value in the asset below what they put in, right? So at
Yeah,
that
they go
point, you either
negative
make a
MNAV.
you
Yeah.
either make a decision to sell real and just scrape a little profit, or cut your losses, or you hold on, take the downturn, and wait for it to turn back up. Is that your argument for why you should be grateful for lower prices? Because if you're losing money, you're not feeling good about it. And yes, you could say just put more in at the low end, but that's assuming you're not suffering from the amount you lost, and you got to wait, right, till it
Yeah.
goes back up.
Yeah. I mean, if it's Bitcoin, you just wait and you accumulate. That's what you do. If you're negative MNAV, which just means for I'm talking corporate and company speak for being underwater. Like if it gets under your entry, just dollar cost average down at levels that make sense for you, or do regular buys. Because there's only so much Bitcoin, and all of these institutions want to use it as leveraged capital, right? That's what we're gonna see.
And
Could
is that why?
prices
So that's why you would say it's a blessing, because even if you go under your buy-in point, you would say just at that point, just keep steadily buying and
Yeah,
buying in
buy your
small
cost
amounts,
basis
whatever you
down.
want. What's
Yeah,
that?
buy your cost basis down if you're underwater. I mean, that it only makes sense. I mean, we are getting
But again, it only makes sense because it's going to go back up over that, right? So if you bought at 60
in
and
the
now
long
it's at
run.
50, buy at 50 because in 6 or 8 months that 50 will go, right? That's what you're
Yeah.
saying.
Yeah, just accumulate on the way down in larger and larger lot sizes. Yeah, because over Bitcoin is programmatically going to go up forever.
Hmm.
Programmatically. And there might be extremely long periods of time where it consolidates in a sideways structure that many could consider a long bear, or in a very large range, because I do think that's coming up in the coming years. But at
But
some
not most likely this year.
I
Not
think
in
it's
next
less
year,
likely right now. I
a long
I
bear, because you said you think it'll be a short bear market if there is one.
I think we get a short bear market mainly because of the minor capitulation event that I need to see happen, because there's two parts of every cycle. It happens every time, and anybody who's in the mining industry knows this. But I think more people should understand this. There's the halving cycle, and then there's the minor capitulation cycle. You get one of each every cycle.
And we have not hit the wait. Have we hit the? We haven't hit the capitulation cycle.
No, we
fully.
haven't seen a massive minor. No, because you get a hash crash in a minor capitulation event. And what's buffering that is all of the institutional buying, because they're holding the floors up, allowing time for the miners for the network to adjust. So when price is being drawn down, even in the quote unquote crash scenario, I mean, just look at my chart. That's a crash. Are you kidding me? That's a crash on the daily. Sure. Yeah. Big old expansion to the downside on the daily, but on the monthly, it's just a mean reversion, right? So revert back to the mean.
Show me with your arrow the time frame, because it's too small for me to see.
The time frame is the monthly.
Got it.
This is the monthly time frame. This is
Got
mean
it.
reversion on the monthly, meaning we're we picked up volatility over here, and then we've been slowing down our roll to the upside. Now we mean reverted back to a basis, and that is in this case a 20 simple. And and realistically, what we're seeing is price compression on a high time frame. This being the monthly. There's only two ways this can resolve, and that is to the upside for a move back above the highs and then go on a leg, right? And what's happening is during these periods when we're seeing these drawdowns, right? Right here, and now right here, what we're seeing is buyers coming in and buoying the floor. That's been mostly institutional buyers. Buyers coming in and holding the floor, but allowing for price to slowly bleed down, right? It's not this big jagged moves down, right? But slowly consolidate down, Big moves in between. You get the big initial moves, right? And even a little ending move, a big initial move, an ending move, and then up, big initial move. We'll probably get an ending move. And then it's all about what does it do from there. And the reason why this cycle has been different is because when these institutional buyers come in and they bid the floor up and hold prices in these areas or these zones, it allows time for the network difficulty to adjust down on that downside move and for miners to become profitable again, thus preventing the hash crash. Right. So
real quickly, and I want to let you, I realize what time it is, and I apologize. You stayed way longer than you said you would,
it's
which
fine.
I appreciate.
It's fine. I got everything done before I came on.
Okay. Good. Well, you tell me when, because I'll keep going with you for a few more minutes. It's really interesting to me that you talked about the hashtag. I never thought of that. And again, I don't look at the charts like you do. But your point for people listening would be the fact that that hasn't happened and the minor capitulation hasn't happened. You explained why, because probably institutional investors are coming in and thus making them not have to do it.
Yes.
The effect is they don't have to,
because they're holding price up.
Yeah, they're holding. Yeah. So the miners are okay. The fact that hasn't happened and might not happen. Is that part of the reason why you think there might be the what did you call it, the deviation up?
Well, yes, essentially, yeah. And that's where we get, I think that in order to get an actual deviation, because right now I'm telling you, this is bear market vibes all the way with the way that this monthly looks. But what we could see is a potential deviation where we make a monthly lower low and then head right back up. And the main reason why is because if we dump down from here and we start getting in and around this area here that I have,
you're in the
pointed on
70s there, right?
Yeah, this is upper 60s to $74,000, right? So over here we've got upper 60s. You could call it 60K to 74K. If we start dipping in there, miners will capitulate. We will see hash rollover. We will get a capitulation event, and every single time that we get a capitulation event, we get what's called a tailwind on the mining side, meaning that the network adjusts. The network here will adjust its difficulty number over here down exponentially faster. Right now, it's just little adjustments, 2% here, 1.5% here, so on and so forth there. But what you'll start seeing is the upcoming adjustments we'd see coming down like 5, 10, 20%, right? And then what happens is miners become instantly profitable through those tailwinds and start turning back on in a big way. And as they're mining the Bitcoin, they hodl it. And then as soon as buyers step into the market, wherever that might be, it slingshots price because it takes time for the difficulty to adjust up. These miners are in tons of profit for every Bitcoin that they mine. And that means that
So
as
when does that?
it'll
So
slingshot up.
give me a sense on that capitulation time frame. We haven't hit that yet, but say we did.
It wouldn't
How
be a
long
time
is that
frame, it'd be a
window
price
before
point.
you get the slingshot?
Yeah, it wouldn't be a time frame, it's a price point. So right now, based on network metrics, it would be below $74,000. We would start to see it happen.
The
In and
capitulation.
around, yeah, between 60 and 74,000 is when we would start to see that true capitulation, post halving capitulation start.
Right.
And it might not even be a big one like prior because we have really efficient mining operations now. About 18 to 20% of the network is both diversified through the company side, but also diversified in the AI sector. But they also are highly efficient on the mining side, meaning their operational costs are already low. But if we saw it dip into operational costs, we'll see hash roll over and then rebound once the network starts to adjust down. Buyers step in, miners they hodl, and then we get a slingshot. And that's where
Yep.
we could be set up for a deviation. Otherwise, we are absolutely likely going to go for lower lows, lower highs. But these are the two scenarios right now. And that's where we would get a lower low to a higher high. That would be a deviation. That'd be the first deviation that we'd ever seen on a structure break for a monthly. Or we get a lower low and a lower high, and then we go into a bear market
And
for like a
Landy,
year.
2 questions. One, which do you think is more likely? And 2, if it is the deviation where you get the lower low and the higher high, once that minor capitulation starts, what's the typical window before you start seeing the move toward the upper high? Is it in the course of a couple weeks?
No, it'd take it'd take at least a quarter to 6 months. So you're not
Right.
quite a bear market. And it would still be a bear market technically, but it would be probably around the 6-month time frame for that recovery, which literally puts us in bear market territory because by the time you recover and make new highs, you're probably 9 months to 12 months later. Right? Like and this is why I'm not sold on the lengthening cycle. It is just I think that it would be I think that if we were to do something like a lower low, lower high, it's got to happen coming into the end of Q1 of next year, right? If
Mhm.
it's going to happen, we'd see a lower low, or maybe it just hangs out here, right, and then tries for higher highs. That's got to happen by Q1. So between now and Q1 of next year. Otherwise, I think we start dragging this out and rolling over. So I would say the Q1 to Q2 transition next year is going to be the most important thing to look out for. Just like I said last year, last year, David knows this well because I was screaming about it on every stage I possibly could. He got sick of it. He doesn't mute anybody, but I'm sure he wanted to mute me. Oh no, he did. He did actually meet me a few times over this one. But I was talking about it back here coming out of, coming into the summer months. And once
Mhm.
we got the Q3 close, we were in Q4. I was saying, next year we're probably going to leg up, but next year, Q1 to Q2, we're probably going to crash because of the way that the market was set up. And that's exactly what it did. So we're probably set up for that same kind of thing because prices headed down. Remember that, last year we had a red month, right? Now the difference is that this year November is likely going to be red. We had a green November, so we're kind of looking for the inverse coming into December. We want to see if it pumps up and fails and then heads down, right? So we get something like maybe this is the low, right? Maybe we get
This
something
you're
like.
saying right now. When you say
Yeah,
this, you
like
mean
right now, maybe December heads up and then we reject and then we go into a bear market. We get that capitulation in a bear market
Mhm.
and then we come out
That
the
would
other
be a
side.
good scenario.
That's actually what I want to see. This would be the preferable path, because the other thing is, if we could potentially in December keep heading down, break, and then we go lower low, lower high, and then go into a bear market. But the other scenario from there is realistic though, because if we could slingshot from one side to another, because this is a macro compression. Um, downside at worst, I think right now I'm looking at, and I'm talking about in a bear market. We're not talking straight down from here.
Right. Right.
I'm looking at base case being around $50,000, which is getting down to this structure here, which is also a level of interest for volatility. Around 50 to 55,000. That'd be like my normal bear market target. Deep bear market, I'm looking 42 to 45.
Whoa.
Yeah. Deep discounts, but that's like bear market bottoms. You better be buying those in and around those kinds of prices. And that's where I would be, not financial advice, obviously. Well, and I'll be analyzing it the entire time. But the main reason that I haven't called a macro high, I just called it, at 123 to 125 is my upside target, but I haven't called it macro top in, is because I want to see confirmation. I want to
Mhm.
see the breakdown to a lower low, lower high, right? And then head down, right? And then start
And what's
coming
a
out of it.
lower high look like in your mind?
I think a lower high can rally as high as 112. If it fails
Okay.
that, it's I know a lot of people get excited back above 100 to $101,000.
Yep.
That
Yep.
would probably push us to a rally at 112. Realistically, anywhere between 112 and 116 is danger zone for people bullish. You need to see close above 116 to even run the highs.
Mhm.
I think that's out of the question if we don't see any closes that can consistently push above 116. From here, I'm not, we just barely put in a low over the weekend. So, we're still in the midst of a move on the daily, for instance.
Mhm.
If we look at the daily here, it's still a downtrend, right? Like the last lower high, right, is all the way up here at 107 and a half. And we dumped
Mhm.
all the way down to 80. So this is a good place to find a low. We don't, there's still low that there's still juice left to the downside though, if the bears want to take it. They're in
Mhm.
control right now. So if they want to take it back to the low at 80 or push into the 70s down to 74, they actually can. I would say below 80, you look to 78. Below 78, you look down to 74, which because it's big monthly. And there's all kinds of weeklies down here. But this is a big move. So we could rally even all the way back to like the mid 90s.
Mhm.
And we're
And
probably going to put in a lower high.
yeah, so we could
Because the
rally back to the mid 90s, maybe even upper 90s, but that would be what at the end of this year?
I mean, that would be, we'd be looking first part. I'd be looking for first part of December if that's going to happen.
That
Right.
soon.
Yeah. Yeah. Because we just set a low. So it's either going to get continuation this week down to test new lows, or we head up, put in a lower high, and then try to do something like, one of these reversal setups. If this is the low, let's say we got to see a lower high come in and then higher low equal low and then try to trend back up. Right. If this
Mhm.
is going to be the low. Otherwise, it's even if we reject here, we're looking for lower lows, and then we're looking for a trend
Lower
break
highs.
from, yeah, this, let's say it puts in a lower high here, then we're looking for probably lower and then head back up to try and reverse or break that downtrend. Right now,
Mhm.
we're just barely set a low. This move's still in progress, so we just
So
need to
you're
see
super
structure build.
optimistic, even though someone listening would sound like this is like a pessimistic scenario. Like you're looking at it, if you go out over a year, you're going, this is actually a great scenario.
Oh yeah, I'm going to be straight up with everybody. You don't want a bull market to continue if you're in Bitcoin. The only reason you'd want a bull market for Bitcoin to continue is because you're massively underwater with altcoins, and you need your altcoins to get above water so you can make some money. Um,
Mhm.
but if you're in Bitcoin like myself, and of course I'm in alts as well, and I run
Mhm.
I run validators on networks and stuff, right? But the I don't I'm a Bitcoiner at the end of the day. So I want to see a bear market. I want more retail to have the ability to buy Bitcoin at reasonable prices instead of having BlackRock put it in their portfolio for them and arb away fees, right? And it's not like you can't take and redeem your BlackRock shares for Bitcoin. Only the AP is doing that arbitrage on the back end, right? So, like at the end of the day, we need to chair anybody in these markets paying attention to Bitcoin. You understand that the institutional demand isn't going to dry up.
Right.
I mean, you don't have a BSR that's and a Bitcoin Act on the way that's going to accumulate Bitcoin at a nation state level because Bitcoin's not going to be desirable anymore, right?
Right.
Like, so you better get in and get prices that are attractive in a bear market rather than seeing this thing go to 150, 175, 200, $300,000 in the next, 3 months, right?
Right.
You don't want to see that, to be quite honest.
Well, you do if you want to, if again, it's a bit, right. It's how much capital you have to play with, right?
Yeah.
You do if that means you have a lot more capital, you could take some profit off the table. That would be helpful to a lot of people, right? I mean, it's how much liquid you have to throw in. I guess what I'm saying is if you're losing a lot of money on the downside, throwing more money in makes sense in the long term, but you got to have somewhere to get the money to throw in from.
What's the meme? You didn't lose money if you didn't sell.
Over time.
Yeah. Well, I mean, look, if somebody's underwater at these levels right now, look, you should have already taken profits by now, and you should be thinking about where you feel comfortable accumulating on the downside, and you should be planning for that, right? I get questions like this all the time, right? And look, I'm just a puppet in sunglasses on the internet here, but if you're underwater and you dump your position here, it doesn't make sense.
Yep.
It makes sense to think about accumulation to the downside and what levels you would be comfortable buying.
And possibly also consider taking profit if it bounces back up to over 90.
Yeah.
Take
just
some
be
profit.
aware.
Don't wait for it to try to get the 120.
Yeah, just be aware that if it runs away from you, don't cry. You took profit. Right?
Yeah.
Like, if it runs away and it deviates, or let's say it holds structure here and it doesn't like close below.
This is fascinating. This is just fascinating. This is just fascinating to me, the chess in all this.
Yeah, I mean, look, I'm of the opinion that you have a very limited window to get into Bitcoin and hold it non-custodially.
You're saying you have we as a whole,
as a society, we have a very limited window, in my estimation, to get into Bitcoin at reasonable prices. Therefore, we should, and self-custody. And we should cherish the opportunity for the possibility of going into a bear market from here. Because if we don't, you're going to be buying at much higher prices, or you're going to have all of these AUMs and all of these treasury companies being put into your portfolios,
right?
Or you're going to have to go to them, and you're just getting a vector.
Andy, what's the difference, just real quick, for people who aren't as familiar with this? What's the difference if you're say having Coinbase hold it? Does that change that equation?
Well, I mean, you should custody your own Bitcoin, right? Like I'm not a fan of centralized exchanges.
Mm-hmm.
They have their place, but you can go there and you can buy it. Just get a hardware wallet and put it on your hardware wallet. And make sure you protect that, right? Make sure you have your private keys backed up on hardware or on paper, in this case, the key itself or your seed phrase on something that can't be burned in a fire in a safe. You can go multi-sig, all kinds of stuff, right? But realistically, you don't want to be on exchanges unless you're there to buy or sell.
Mm-hmm.
That's my take on it.
That's most people's take who are, true Bitcoiners and have been in the space. It's not what most people do or will do.
Yeah, no. Most people are in hot wallets and they click on funny links and get their entire savings drained, unfortunately. And you know, people are getting got on they're still getting got on the Coinbase, the fake Coinbase texts, right? People, a lot of Coinbase customers still get that and fall for it and click on the link, and then all of a sudden all their holdings are gone.
I swear to God, people have to not. This is like I said this to everybody. Never ever click on anything. Basically, it doesn't matter who it
Yeah.
says it's from. Like unless you absolutely know, and usually they won't text you. Like
Yeah.
you
Or
know.
don't have the Coinbase app on that phone, have it on an old phone that is only connected over Wi-Fi when you are going to do
Mm-hmm.
transactions or something. And then
Mm-hmm.
anything else is in hardware. And that goes for more than Bitcoin. That goes for any of your crypto holdings. I mean,
Yep.
it's just, it's and unfortunately, I've seen too many people get wrecked,
Yep.
and then trying to help them in various ways of trying to deal with the process of getting through to Coinbase and tracking things down. That's always fun, and in most cases, they're never going to get their money back, right?
Mm-hmm. It's
So
true.
unless they have insurance, which you can buy, but it's very expensive. But if you're a
Yep.
high net worth individual, you should have insurance for that stuff.
Lots of good information here, Landy.
Yeah,
You
I've been around a
gotta,
little bit.
you got to do this more often with me.
Yeah,
It's really it's fascinating, and I want to kind of it is like I said, a game of chess.
absolutely. Yeah,
You know,
look,
high risk. It's almost like you're gambling in a weird way. You are because you're trying to go. Like you said, yeah. If you sell, but if you then watch it go up, what you only lost because you sold. Same time, if you sell and take some money off the table and it goes down, you reinvest it. That was a good move.
yeah. I mean, for me, I trade, right? I come from markets. I'm a trader. I've been net short for a while. From around the highs, I've had a short position, and then I start to go net short. Which, for anybody that maybe doesn't know, I took a bunch of short positions across the crypto space in general against all of my holdings, right? So I hold spot. I take a bunch of short positions across various exchanges and perp dexes. I ride the downside to the key levels, and then I fill the long side at each key level. I'm still net short. I'm still net 75% short, but I just got fills, for instance, at the $80,000 weekly level, right? So, that the other side of that position is now filled on the long side. So I have exposure to the upside, and I have a hedge on my downside, right?
Mm-hmm.
So I took here. This is stacked weeklies down here. So we have $80,000, $78,000, and then 74 being the low, but 78 to 80 is stacked weeklies, right? So
Mm-hmm.
I took some fills there. I took some fills between 93 and 86 here as well. So, but
Wow.
I'm still heavily net short. So I'm hedging my portfolio on the short side.
But you're a true
And
trader.
yeah, well, I day trade, but I also swing trade. I primarily swing trade, and I just day trade to jump in and out of a few things here and there while I'm
Right.
talking to people.
But I mean, a simple trade people could do is just to protect their Bitcoin on the downside. You don't have to be as complex as you could simply, you could just prepare for what's a low you want to be able to take a profit on, right? That's not
Yeah,
complicated trading.
you pay yourself on the upside moves. If you're going to actively manage your portfolio and try to trade it, which I suggest that most people, if you don't have experience doing it, you probably should just let a professional do it. Like go to a
Exactly.
professional.
Exactly.
But if you are going to manage it,
That is financial advice we're giving people.
yeah.
Probably if you don't know how to do this, don't just try.
Yeah, don't just jump in and like, I think I'm gonna sell it. Like, because look, I'm watching across socials today. Look at this massive downtrend. People the past 2 days have been like, oh my God, we're so back. And it's like it's literally the meme that you see of the guy like just ogling at the chart and it's 1% up. And it's like, yeah, no, this is still a massive downtrend. Like, so
Mhm.
it's either continuation or let it find a floor. So, wherever it pumps to, let it retrace and then evaluate, right? If you want to go and buy, right?
Good,
Um,
good stuff.
so, but it's really at the end of the day is, in the big, massive moves up, if you're in profit, you pay yourself. And then when it goes back down, you find where you want to buy again. And that's pretty simple stuff. It's just the reverse happens. People freak out when prices are dropping, and then they start dumping their own to say, oh, I'm going to buy lower. And then it runs away from them and they end up buying higher. So their cost basis keeps increasing. And then they're just arbing money away to the market.
Randy,
like
there's
guys
something
like
about
you're just
life.
taking it.
There's something about life in that goes beyond just how people react in the markets. There's something about the nature of human beings doing that, and just about everything.
Yeah, and markets are a very good reflection of human emotion.
Yep.
So,
Landy, I can give you two options. One, I can let you go. This is fascinating. I actually do the nightly recap, which I realize just started, although it's not starting because I do it. So
it's all good.
It can't start because I'm here. But I'm going to switch over to it. And if you want to stay for a couple more minutes, I'll just invite you in for a couple minutes. We can finish the call at the top of the recap.
Well, I actually do have to
Or you
get
can
going
go.
because it's around dinner time here. So I'm going to
Well,
go
then-
jump off and have dinner. I appreciate you bringing me on, Rob.
It's been great, Landy. Everybody, Landy, you're awesome. I love it. And Landy, I'm going to reach out to you if that's okay. I'm just, like, full disclosure, everything we listen to doesn't matter. I'm going to reach out to you tomorrow if that's okay, or later, because I want to ask you something, and it's about a future thing I want to do on this with you. So you tell me it's better to do it tonight or tomorrow. I'll telegram you, call you.
Yeah, just try texting first, see if I'm available, and then we'll pick it up from there later.
Awesome. Landy,
All right.
Thank you for joining.
All right, thanks, Rob. Thanks for having me. Have a great night.
Hey, everybody. Thanks for watching. I'm going to just say goodbye here, and I'm going to let Landy go. So Landy's gone. Landy's charts are gone. Landy's charts are great. And I'm going to say goodbye to you, and I'm going to pick up the recap on the other side. So stick around. Just tune right into the recap, everybody. Thanks for watching.
Meet Rob Nelson, talk show host.
Because you got the 70s thing going there. I got someone's underwear.
Robert Kennedy, thanks for taking a minute. Simple question.
Tucker, it's good to see you. Listen,
If you're a Bitcoin maximalist, you're Bitcoin forever.
I hate this central bank digital currency.
Hey, I don't have all